Welcome back, and joining me for a closer look at what's played out on the market scene today is Zwlakhe Mnguni from Benguela Global Fund Managers. Thank you so much for your time, Zwlakhe. It is the last trading session for the markets for the month of June, for the second quarter, and also for the first half of the year. How would you characterize market behavior so far this year?
Volatile, I'd say. I think it's been a roller coaster, but with new highs being hit every now and then. So hasn't been a bad quarter, hasn't been a bad year, but I think the volatility was quite strong.
Yeah, that's actually quite interesting. You talk about those record highs, and particularly in the US. Is there a certain positivity that the markets are pricing in at this point?
Yeah, I think the market seems to be pricing in that the trade tensions would be resolved to a large extent. And I think if that gets resolved, we're going to see a strong rally in the tech sector. I mean, the likes of NVIDIA have been affected by the challenges or the confrontation between China and the US. So if you take that away, NVIDIA might be able to get their product into China and be able to get more growth out of that market. And I think it's the fastest growing market for the AI technology. So markets are looking at that quite positively. I think on the downside, you'd probably see that consumer spending is starting to show strain, and we might see the consumer discretionary sectors starting to struggle in terms of earnings growth. But so far, earnings have been coming through in the US very strongly. So I think one cannot deny the fact that the market has been optimistic, but fueled by good earnings delivery.
All right. Well, let's get into some of the company news that came out on the JSE. Reinet, once again, this week is rallying. Today, it rocketed about almost 12%. And of course, we saw the first rally last week. And this is as it snuck in an announcement after market close on Friday, confirming the rumors that we'd heard about a potential disposal of its interest in its pension fund asset, the Pension Insurance Corporation. How are investors looking at this potential transaction?
The transaction is significant. I mean, they had it. This is the biggest asset they have on their books. So if they are able to realize even a small premium above it, I think that would be meaningful for investors. But I think the next question is, what do they do with the money? I think the market might be betting that they'll pay out the cash. I've looked at their performance over the last 10 years, over the last 5 years. It does seem like they've just kept up with the market in dollar terms, SA market and MSCI. But I think this could be a big catalyst to value unlock for them.
Yeah, indeed. A lot of focus on Reinet in the last 2 weeks. And we will see how negotiations and discussions for that actually go. Let's get into the commodities sector. Exxaro releasing its interim update today. They mentioned headwinds in the coal market when you look at it from a price and demand perspective. Iron ore market also having its own problems linked to China. So I'm guessing this doesn't mean great numbers from Exxaro in this half-year period?
Yeah, it's a difficult period. I mean, I think they need to now show that they can turn the business around. I think the CEO changes of the last 12 months may have had an impact on the operations, and we are seeing that in the production numbers. But we are also seeing that even their wind energy business, their renewable energy business is also struggling from a volume production point of view. So there has been quite a challenging environment, and that has been exacerbated by a lower coal price.
All right. Well, talking about commodities and mining, but a company that services that sector, AECI, it came out with a 5-month update. The company saying that the results are mixed, revenue taking a dip, but profit improving. What do you make of AECI's performance and positioning in the market?
Look, I think if you look at the operating profit, I mean, it looks decent. I think they'll grow by about 25% at the operating profit level to 1 billion rands. But they seem to be doing a lot of work around cost efficiencies, restructuring the business in Germany. They also exiting the asphalt business. They seem to expect that they'll be able to get 1.1 billion on that sale. So it might maybe mean that shareholders might get a nice dividend to tidy them over this period of poor performance in the operations.
All right. Well, let's get to your stock pick for today, Zwlakhe. What are you choosing?
I went with EOG Resources. It's a shale producer or shale gas producer in the US. Their cost of production is the main attraction. They produce at about $9 for an equivalent of a barrel of oil. And they are operating in a stable environment where in the US, in the Permian Basin. So I believe that they can continue to deliver. They've just bought another resource next to them. They will be able to increase production from here, even if the oil price pulls back.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Zwlakhe, and really so far in this first half of the year. That was Zwlakhe Mnguni from Benguela Global Fund Managers.